This is the brief on IndexViz Pro MT5. So IndexViz Pro version 3.0 is an institutional-grade trading indicator for MetaTrader 5 that simultaneously scans dozens of markets. We're talking everything from crypto to commodities. Honestly, it's like upgrading your trading view from a manual magnifying glass to a full-on global satellite system, doing all the heavy lifting for busy traders. First, instead of giving you isolated data, it generates a unified 0 to 100 bias score for every asset. It automatically combines and weighs 5 key metrics: trend, momentum, volatility, volume, and divergence. So what does this all mean? Well, it's literally like pulling a highly accurate financial credit score for every single trade setup. Second, the tool features an adaptive engine that completely ditches fixed periods. It dynamically adjusts its settings based on current market volatility and automatically tweaks the weight of its metrics based on what has historically worked best for that specific symbol. I mean, why rely on rigid fixed settings when the market itself is constantly shifting? Finally, let's talk about how it protects you. The scanner tracks smart money concepts like fair value gaps and liquidity sweeps, but more importantly, it features automated risk management. It calculates your stop losses and actively blocks new signals if you hit your daily drawdown limit. It's absolutely crucial to have a built-in risk manager, literally forcing you to step away from the keyboard when you're taking on too much risk. Ultimately, by combining multi-market scanning with an adaptive scoring engine and strict drawdown limits, this tool brings institutional-level discipline directly to your retail screen.
Have you ever found yourself in this exact situation? You've got your trading desk set up like a NASA control room.
Oh, yeah. The classic retail trap.
Right. You are staring at like 5 different monitors. You're trying to track the US Tech 100 on one screen, and then maybe you've got the euro-dollar pair on another.
Mm-hmm. And gold is pulled up somewhere, too.
Exactly. Gold is blinking away, and you're keeping one eye on crude oil just in case. And you are just burning raw mental energy trying to process all these, blinking ticks.
Exhausting.
All these moving averages, all these trend lines. And then the very moment you look away, like, it's to check an economic calendar or, I don't know, pour a cup of coffee.
That's always when it happens.
Always. You hear a ding, or you look back at the screen and you realize you completely missed the absolute perfect textbook setup.
Yeah.
Because it happened on the one chart you weren't actively analyzing at that exact millisecond.
It is the defining frustration of the modern retail trader, honestly. I mean, we are operating in an era of just unprecedented market access.
Right. We have all the data.
We do. But access does not equal processing power.
Yeah.
The sheer volume of data streaming into a retail terminal these days is, well, it's paralyzing.
It's too much for one person.
Exactly. Human biology literally is not designed to track 20 independent, highly volatile variables simultaneously, and then somehow extract a statistically probable outcome from all that in real time.
Yeah, we just hit a cognitive wall. And I feel like the typical response to that wall is a vicious cycle.
Oh, for sure.
First, you get overwhelmed, right? So you try to trade purely on intuition or gut feeling.
Which is dangerous.
Highly dangerous. It's usually just a polite way of saying gambling. And it ends in total disaster.
Always does.
So then you swing in the completely opposite direction. You load up your charts with this convoluted mess of lagging indicators.
A spaghetti chart.
Yes. You've got MACD crossing over RSIs. You've got Bollinger Bands stacked on top of moving averages. And your chart was like a Jackson Pollock painting.
And you can't even see the price anymore.
You literally can't see the candles. And the worst part is, the second the market shifts from a smooth trend into a volatile, choppy range, all those indicators fail at the exact same time.
Right, because they're static.
Yeah, and you are left bleeding capital, just wondering if it's actually possible to process market data without completely burning out.
Which is really the fundamental problem we are tackling in this deep dive today. I mean, the modern trader does not suffer from a lack of data. If anything, they are drowning in it.
They need a life raft.
They need a filter.